Hello guys, welcome once again to Traders Delight. How have you been and how has been your trading sessions? Hope you have been getting amazing results from all your trading activity. Alright, today we are going to be looking at further discussions on the topic we have been looking at, and I've been discussing how traders out there can become much more better in their trading, and how you can differentiate between market structure, which is the history of the market, and your strategy. I told you they are not the same thing. And today I'm going to give you some very powerful pointers that will make you know if your strategy is good or not. There are many people that don't know if the strategy they are using is good or not. Today I'm going to answer that question, and all you have to do is just listen attentively and get as much value as you can from this video. Okay, now, like I explained before, I said most times traders, especially when they are new traders, they get into a cycle where they see others doing it, and then they wish they can't for themselves, and then they go through the cycle of going from one trading strategy to another trading strategy to another trading strategy, and then they have the whole experience of the good, the bad, the ugly days of using a strategy, and then some of them even conclude that trading doesn't work. So I said the last time, I said trading is not a game. You can't gamble trading unless you are going to be, you may make profit, but you will also be hurt, because trading is not a gamble. Trading is a skill. And I made another point very powerful the last video. I said in trading, don't try to be proactive. You can only be reactive in trading, because trading is such a beautiful setup that you have millions of buyers and sellers all over the world without knowing each other, coming together to make decision on the price of an asset. You cannot, there's no forum where you can have everybody just pick the same thing. So what you need to do is to be able to understand the coalition of people's psychology. You must be able to understand mass psychology. From what you are seeing from price, what is the market saying? What are the people saying in the market? And that does not look like gamble. It is skill. So, and I said that before you even go to the point of saying you want to use a strategy. Strategy is not the first thing you want to use. So I said trading is not something you should be proactive about. You should just be reactive. So that means you need information for you to be able to react. Reaction comes from an action. Market will act, then you react based on what market has done. And whatever market has done is called history. It's called market structure. And you can see that when you go from time frame to time frame, like I said, if we go from 1 minute, let's go for 1 minute now, and let's see how it goes. So when you see on 1 minute, you will get an idea of what price is doing, an idea of the history of price. Then if we go to 5 minutes, you see a bigger picture. See a bigger picture of history. It's still a bigger picture of history. Now, you go to 15 minutes, you see a bigger picture of history. You see more details. There are more details that comes to you. All right. So you go to 30 minutes, you get more details. So, and then you go from there, go to 1 hour, more details. Can see that there are more things you can say about price. And then you go to 4 hours, you get more details. You go to daily time frame, get more details. You go to weekly, there are more details that comes there. So you are getting more details of the same history. And then you go to monthly time frame. Like if you have observed my videos, I like to go to a point where I can see the whole view of the market. So market is telling you something. So what are you doing with the information that the market is telling you? This is boom 500. So what are we going to do with this information that the market is trying to let us know? So looking at this now, we can see that just looking at this, you can see that we can get a lot of information from here. Take for example, we can see that price was making a lower high, lower low, lower high, lower low here, which signifies a downtrend, and then all of a sudden there was a break off from here, and then price began to do higher low and higher high. So higher high, higher low, so higher high, higher low, higher high, higher low, and then price made a higher high, and instead of making a higher low, price broke this. So there was a break here, signifying that something must have made price so must make it so difficult for price to continue the movement upward here, and which is likely to be this. You can see as little as this is, there is there is a supply zone here that made price come so strong down there. And now that price has broken this, you can see that there's a likelihood that price is going down. So you see price has made a lower low and then a lower high. So this indicates that we are on a downtrend here. So you see that information is powerful. So I'm going to add it to the other time frame. On a weekly time frame, you can see it's becoming even more clear on the weekly time frame. As you can see that weekly is telling us that, oh, we can see this upward movement very clearly, and then we see how price came here, and then we are seeing the reaction of price from this. So you see that it's important to understand this, and then you go from that to daily, and then daily you go from there to try and check and understand what price is doing. You go from daily, you go to 4 hours, you start populating your history. What can you see from the information? Let's allow it to load. What can you see from the information that price is giving? And then you go from there to 1 hour. So what can you see from what price is giving? And then you go from there to 30 minutes. You go from there to 15 minutes. Okay, let's allow 30 minutes chart to open. All right, so you go from there to 15 minutes. You go from there, so you can see what we are seeing from the market, and these are the things that will inform how you will apply your strategy. So you can see we have not discussed strategy yet. We are only getting history from the market. If you don't do this and you just apply your strategy blindly, then you are trying to presume or predict. You don't do that in trading unless you just make things that you are not even planning for. So what you need to do is to understand what is really going on, and then you see, go to the 5 minutes. Let's allow it to open. So go to 5 minutes, you get an information, and then like we've seen before, the 1 minute you get your information. Now once you have all this, you are able to understand both the market structure in different time frame. Putting all this together is the market history. Now once you have the history, now listen, your strategy is most times not the issue. It's just because you have not gotten how to apply your strategy properly. Many people say, oh, I'm a scalper, I'm a day trader, I'm a swing trader. It doesn't matter which one you are. What matters is the strategy you say you are using. Do you know how to apply it well? So one of the things that will bring out the best in your strategy is that your strategy must align with the history of the market. Your strategy must align with the history, with the market structure history that you got from all this time frame put together. Your strategy must align with it. And it is until your strategy aligns with it that you can go ahead and use it. If your strategy does not align with it, just stay off the market. It means that your strategy is not strong enough to give you a good go ahead for the market. So the reason why many people go through and they experience different wide variety of results. I'm not trying to claim that someone can be all 100%. Although I'm not trying to also say that you can't go as close as possible, but I'm trying to make you understand that if you only take out those times where your strategy does not align with what the market is saying, you will realize that your win rate will increase significantly. In fact, your win rate will increase so much that you will be happy with yourself. So now, to the important thing I want to answer, which you all have been waiting for. How do I know that I have a good strategy to use? How do I know I have a good strategy to use? Now listen, it doesn't matter what the strategy is. It doesn't matter what strategy is. The strategy must be able to help you understand the following. Please pay attention. The strategy must be able to help you understand the following. Number one is that your strategy must be able to help you know how to connect with the market history. If your strategy does not know how to connect with the market history, that strategy is a bad strategy. Even if you're a scalper, if you're a day trader, if you're a swing trader, if you cannot marry the information of the market history with what your strategy says, if there's no input on, okay, this is what the market history is saying, and then I can align it with my strategy, you are using a bad strategy. Discard it. Go for another one. Now, I'm not saying that you can now, if you are scalping, discard it and then you go for day trading. If that is your choice, go ahead. But I'm saying if there's a scalping strategy that does not help you to do that, go look for a better scalping strategy that can help you do that. All right. Now, number two thing that your strategy must be able to do for you to know if your strategy is good, is that your strategy must be able to tell you where to take your entry. If your strategy cannot tell you where to take your entry effectively, discard that strategy. Now, listen, if for example, when we are using a strategy that has a 50% win rate. Now, I'm starting with 50%. Now, it means that there are 50% good days and 50% bad days. Now, for those 50% good days, if your strategy is unable to effectively tell you that this is where you should enter, because many times people who are profitable using a strategy are not profitable because of the entry predicted by the strategy. They are profitable because of revenge entry. Maybe when they enter the trade takes them out already, but now it's going in their direction. They re-enter the trade and they go for revenge, and that is how they become profitable. So if your strategy cannot successfully let you know, if all of a sudden you know the direction of the market, you know the balance of the market, you know where the market is going, but almost all the time your strategy is you go through a very big drawdown, almost as though you want to shift your stop loss before the market start going your direction. That's a bad strategy. Go and look for a better one. It means that the strategy is failing to be able to help you know where to take your entry. Thirdly, your strategy must be able to help you know where to place your stop loss. There are people who, if they had a better strategy, they will be fine. And it's not as though they are not following their strategy, but imagine a strategy that every time you take the trade, it is after the trade takes you out on stop loss that it will start going your direction. What kind of a trade is that? Every trade you have called, every trade you pick, they all went in the direction you took. But why are you in the trade and putting stop loss where the market will take you out first and then bring you and then go in your direction? That means you are in negative. The person is making a loss, not because they were not right about the direction, but because they had a very bad strategy. So you have to change that strategy. That strategy is not good for you. It's a dangerous strategy. So don't go and waste your money on that. And that's why I always advise that whatever strategy you are using, test it on demo first for a long time before you are able to go and be using it on live money. Then number 4 is that after your strategy has been able to align with market structure, number 2, when your strategy has able to align with number 1, align with market history, like I told you, like I showed you, and number 2, be able to detect where you should place your entry. Number 3, after the market is able to tell you where to place your stop loss. Also, number 4, your strategy should be able to let you know where to take your target profit. Now, there are many people in which the strategy they use is effective in predicting entry. It's a very effective in following the market structure history. Number 2 is effective in predicting entry. Your number 3, the strategy is effective in predicting stop loss. Most times, the trade you take are always in your direction, but the strategy is very poor in predicting target profit. There are many people that maybe the target profit is 10, and then they are risking there is 10, let's see, just say for example $10, and they are risking $1. The strategy has placed them in 10, and then almost all the time the market will come to 9.5 and then take them out and then go for their SL and go for their stop loss. That is a bad strategy. It means that the strategy is not able to predict for you safe profit place, safe profit zone, and you are not able to keep what you have gained. Imagine how long you have to wait for you to gather so much profit only to lose it back to the market. That is a bad strategy. So you need to make sure that your strategy can do all this. If it fails in one, replace it immediately, because many people are out there and they are looking down on themselves. They feel like failures, all just because they have a bad strategy, and they are waiting for who will tell them change it, look for a better. And complex, that the strategy is complex does not make it a good strategy. Most times strategy are quite simple. Simple strategies are good, but make sure you test them. All right, I hope you guys have gotten value from this, and I need you to reach out in the comment section, give this video a thumbs up so that others can see and enjoy what you are also benefiting, and then let me know. Reach through the description session, and then you can chat me up on Telegram to let me know if you have further inquiries. All right, guys, take care. See you in the next video.